Good morning and welcome to this joint SFA BDO seminar on the Employee Wage Subsidy Scheme. I'm O Brien, a Senior Consultant with BDO's Employment Tax Services team. I'm pleased to be joined by my co-host Sven Pollins-Baird from the Small Firms Association. A special welcome to our guest speakers this morning from the Revenue Commissioners. We're joined by Garode Murphy, Principal Officer from Revenue's Personal Division, Laura Glancy, Assistant Principal in Personal Tax Policy and Legislation Division, Angela, Principal Officer in Medium Enterprise Division, and Siobhan Gilburn, Higher Executive Officer in Personal Division. I'd also just like to take this opportunity to acknowledge the amazing work that has been done by the Revenue and its staff over the last number of months in responding to the crisis, not just in rolling out the two subsidy schemes, but also in support of other state agencies that have been going on in the background. The Employee Wage Subsidy Scheme will replace the current Temporary Wage Subsidy Scheme and is an important part of the government's response and support to business in recovering from the recent crisis. Siobhan will take us through the transitional measures associated with the Temporary Wage Subsidy Scheme, as well as outlining the operation of the new Employee Wage Subsidy Scheme. So we basically our agenda. Sorry, ahead there. We'll do a quick recap on the and moving forward on the TWSS briefing on the new subsidy scheme, and then an opportunity then for questions and answers at the end. I already have received quite a number of questions, very good questions, very interesting. So keep them coming. So without further ado, I'll hand you over to Siobhan.
Thank you, Pat, and good morning, everyone. And I just want to take this opportunity to thank you for giving us the opportunity to use this platform to get TWSS and EWSS information out there to your members. So as you said, I'm going to go through a brief overview of the TWSS that will be ending on the 31st of August, and then I will talk you through the EWSS as well. So the TWSS aimed to maximise staff retention and the viability of employers' business through this crisis by maintaining that employer-employee link, and offered financial supports to employees of employers negatively affected by the pandemic. The subsidy was calculated using the ARNWP, so the average revenue net weekly pay from the January and February payroll, and then based on rates determined by the Minister for Finance, subject to tiering or tapering arrangements. Subsidy amounts were then paid to the employee by the employer, and the employer then received a refund of those amounts from revenue. So the key benchmark for eligibility of the TWSS was a minimum of 25% reduction in turnover or customer orders, with employees being eligible if they were on the employer's payroll at the 29th of February 2020 and were included in qualifying payroll submissions. Registration for TWSS was through that self-declaration on Ross. However, this is closed from the 31st of July, so no new employers have been able to avail of TWSS since then, and current employers on TWSS can continue to avail of this until the 31st of August 2020 when the scheme closes. I just want to give you some stats as well. So as of yesterday, the 27th of August, Revenue published on the website that there were 69,500 employers registered for TWSS, with 66,200 receiving payments, with 659,500 employees availing of support under TWSS and paying out 2.736 billion, including tax refunds of around 151 million. Sorry, my slides now are stuck. So just moving forward with TWSS, there will be a compliance check program. I'll talk you through this, the end of year review, how employers stop operating the scheme, and the reconciliation process. So the compliance check program. So to ensure the TWSS is operated correctly, Revenue is conducting a program of compliance checks on all employers who availed of the scheme at any stage, not just those currently availing of it. Letters are issuing to employers and their agents where relevant, mainly through the My Inquiries inbox. Revenue teams are working on these cases in batches, So if employers have not received anything yet, keep an eye on that inbox for correspondence, as there is a turnaround time on these letters. It is essential that employers respond promptly, as failure to do so may lead to suspension of future payments. And if you just contact the caseworker and inform them that you are working to get relevant information together for them, and just keep the lines of communication open with revenue. So the letters are to confirm that the employer has met the eligibility criteria. So they will be asked for details of business activities, the negative impact suffered if the business was closed. They will be asked to provide the date of closure or date of disruption. If they were unable to pay normal wages or outgoings, they may be asked to provide financial details to support this, and also details and evidence of the basis for meeting the reduction in 25% turnover test. The check also ensures that employees have received the correct amount of subsidy, and that it is being recorded on the employee pay slips. So they will be asked for evidence to support this, which will include a sample of copies of pay slips. The compliance check is not part of an audit or intervention. The contact is a request for information to provide assurance that the scheme has been operated as intended by employers. In addition, the compliance check programme will address any issues identified in respect of the operation of the real-time PAYE or PMAD by employers over 2019 and 2020, and will provide an opportunity for employers to address any other outstanding tax issues they may have. This will be of importance to employers who may intend to avail of the debt warehousing scheme for employer PAYE and VAT liabilities that were incurred during the pandemic period, as up-to-date compliance will be a prerequisite in order to avail of the scheme. To date, we have had a positive response to this programme, with most employers responding within the required time and providing the requested documentation. And again, excuse me, I just want to remind you how important it is to keep an eye on the My Inquiries inbox for that correspondence if you have not received the letter yet, and make contact with the caseworker when you receive the letter. And you should get a notification in the inbox as well, stating when the check has been completed. So moving on to the end of year review. So the TWSS payments are liable to income tax and universal social charge, the USC, and the pandemic unemployment payment, the PUP, is liable to income tax. These are not or have not been taxed in real time through the normal PAYE system, but they will be liable for tax in USC by way of an end of year review for the employee. When this end of year review is carried out, should an income tax liability arise, it is normal revenue practice to collect any tax owing in manageable amounts for the employee. So this is done by reducing an individual's tax credits for a future year or years in order to minimise any hardship. In this instance, reduction of credits would be from 2022 and may continue to 2026, depending on the circumstances of the employee. If an employee wants to make a payment to revenue, they can also do that. And additionally, an individual may have tax credits to claim in respect of the 2020 tax year. So for example, health expenses, and these can be used to offset any possible liability. So when the continuation of the TWSS was announced to the end of August 2020, in order to further minimise that liability at the end of the year, Revenue placed all employees that received payments under either TWSS or the PUP on a non-cumulative week one basis. And this was a further attempt to minimise the liability or hardship for employees. Employees on TWSS placed on a week one will continue on a week one basis until the year end, and employees not previously on TWSS, where their employer is joining EWSS, will be taxed as normal in real time. And I'll talk you through a bit more of that in the EWSS slides. So how do employers stop operating the scheme? Employers have had the option at any point of TWSS to stop operating the scheme, and this was done by the employer simply stop making J9 submissions and returning all employees to their normal PRSI class. Payments under the TWSS are paid to employers on a pay date basis, not an earned basis. So on the closing of the TWSS on the 31st of August, Revenue will no longer accept J9 PRSI class payroll submissions unless this is the normal and correct PRSI class for employees. Payroll submissions received with pay dates up to and including the 31st of August will be processed for subsidy under TWSS for eligible employers in relation to eligible employees, and payroll submissions received with pay dates on and from the 1st of September 2020 will be processed for subsidy under EWSS for eligible employers in relation to eligible employees for whom the subsidy is payable. So effectively, that means the pay dates will determine the eligibility for either TWSS or EWSS. The employer must retain all records for the operation of the TWSS, including subsidy payments to employees, and this will be important as we move into the reconciliation phase. And employers operating TWSS will be included in the reconciliation phase, and a list of employers will be published on revenue.ie at the end of the scheme. Just moving on to the reconciliation. This is currently in development and testing phase, and further guidance will issue when available. There has been an update on the FAQ document on the Revenue website, and there are more details on the reconciliation phase in that. So essentially, Revenue will reconcile each employer who operated the TWSS on each active payslip. As you might remember, back in March, the employer refund scheme was launched, and then the TWSS was launched. Revenue refunded the maximum amount of subsidy of €410 per employee to employers, regardless of the subsidy that was paid. As we moved into the operational phase on the 4th of May, Revenue provided all the necessary details regarding employee subsidy amounts to employers on a CSV file to ensure the correct amount of subsidy was paid to the employee and refunded to the employer. So this gives rise to the requirement for a reconciliation of those balances from transitional to operational phase. As part of the reconciliation process, the employer will report the subsidy paid amount to Revenue. This is the amount actually paid by the employer to the employee in terms of subsidy. The reconciliation will calculate subsidy payable. This is the subsidy the employee is due based on the rules of the scheme as set out in Section 28 of the Emergency Measures in the Public Interest Act 2020, and the subsequent determination by the Minister for Finance on the 16th of April when the scope of the scheme was expanded. So the calculation will then look at subsidy paid. So subsidy paid is as reported by the employer, subsidy payable as calculated by Revenue, and a third category, caseworker resolved. And this is where a caseworker manually resolves the case. There are options for employers to report subsidy paid under both the TWSS and the employer refund scheme, and can be reported through either a CSV upload available in ROS, excuse me, or Revenue payroll reporting in ROS. So for employers who have a large number of employees, the CSV upload option to report subsidy paid is the most convenient. Most payroll software providers will support this option, and employers should check with their payroll operators to confirm if the CSV option to report subsidy paid is available. And this feature will be available in ROS in late September 2020, and an instruction manual for employers wishing to use this option is currently being prepared. So the employer can also report the subsidy paid by manually amending the payroll notification in ROS. This is currently available, so if you have a small number of employees, you can do that now. Once the employer has provided the subsidy paid amounts for all active payslips, this will trigger the reconciliation process, and it is envisaged that the reconciliation calculation will be available in October. The amounts will be included on a reconciliation CSV file, which will be available to download, and it'll be available in ROS in late September. A message will be sent to the ROS inbox advising the employer or agent that the CSV is available for download, and also a statement of account will also be sent to the ROS inbox with the reconciliation totals. So just a final point to note on that. So for employers making refunds of TWSS back to Revenue, there's a new RevPay facility available, and employers are no longer requested to use the bank details or EFT method as previously advised, and to ensure that only amounts of temporary wage subsidy scheme payments are repaid to Revenue and do not include any payments in respect of income tax and USC refunded. So any repayment of income tax and excuse me, any repayment of income tax or USC should be separately paid under PAYE EMP to ensure the payment is correctly reflected in the employer's PAYE EMP balance. And there are instructions in the FAQ document on the Revenue website. It's under the COVID Info Hub on the Revenue website. Sorry, I'm just now. So I'm going to move on to the EWSS. So transitioning from the temporary wage subsidy scheme to the EWSS. So as I mentioned, TWSS will expire on the 31st of August and no new employers have been able to join the scheme since the 31st of July. But current employers availing of it will be able to continue with TWSS until this time. The Employment Wage Subsidy Scheme, so the EWSS, as announced by Government on the 23rd of July, will effectively replace the Temporary Wage Subsidy Scheme from the 1st of September 2020 and will continue until the 31st of March 2021. However, both schemes have and will run in parallel from the 1st of July 2020 until TWSS ends on the 31st of August, which is Monday. So as employers who were not eligible for TWSS or who had employees not eligible for TWSS can claim EWSS in respect of these employees from the 1st of July. And this will be dealt with as part of a sweepback mechanism, which is currently under development, with proposal for payment of those cases being made in mid-September. And employers must register for EWSS. So under EWSS, the employer will pay the employee their normal gross weekly wages. Excuse me. Revenue will pay the subsidy via EFT directly to the employer in respect of each eligible employee following submission of the normal payroll run. Legislation itself for EWSS was signed into law on the 1st of August, and guidance material has been published on our website since the 14th of August. And you should refer to this in the first instance to answer any queries you may have. It will be updated regularly with any changes, so it's worth keeping an eye on that guidance document. And as mentioned, in Q4 2020, we will see the reconciliation phase occur and EWSS will cease at the end of March 2021. So the key features of EWSS. Seasonal and new hires are included and backdated to the 1st of July, as mentioned, subject to limited exceptions. With payments expected to be made by Revenue in mid-September and then payments for subsequent periods being made monthly in arrears thereafter. So employer and employee eligibility and tax clearance. I'll talk to you in more detail about this in the next few slides. Just one major point, I suppose, that the employer must have tax clearance to register for EWSS. So as with the TWSS and in line with international practice, a list of employers availing of EWSS will be published in two tranches. So the first one will be January 2021 and then the second one in April 2021 on the Revenue website. Registration went live on the 18th of August for EWSS, and you can register through Ross on My Services page and just click the Manage Tax Registrations in the Other Services section and then click Register next to EWSS. So the subsidy is a flat rate based on the employee gross weekly pay, and I'll talk to you about the rates in a few moments. EWSS will be operated through normal payroll and taxation systems, so employers will be required to operate payroll taxes in real time on all gross payments to be made to their employees. And in relation to the PRSI rate, while employers are required to report and pay the full rate of employer and employee PRSI on receipt of payroll submissions, Revenue will apply a reduced rate of 0.5% in respect of employees for whom a subsidy is payable. Employer monthly liabilities will be revised accordingly, and any resulting PRSI credit will be available for offset against future employer liabilities. There are safeguards to minimise abuse of the system, and I will talk to you in a bit more detail about that as well later. So moving on to employer eligibility. So to qualify, employers must be able to demonstrate to the satisfaction of Revenue that their business has been significantly disrupted by reason of COVID-19, and they must demonstrate at least a 30% decline in either the turnover of the employer's business or in orders received during the period 1st of July 2020 to the 31st of December 2020, as compared to the same period in 2019. So in cases where the business of the employer has not operated for the whole of the corresponding period in 2019, the following will apply. Where the business operations have commenced on or before the 1st of November 2019, the 30% decline test must be determined in 2020 by reference to the same period in 2019 in which the business was in operation. Or where the business has commenced after the 1st of November 2019, the employer must be able to show that the turnover or orders during the period the 1st of July to the 31st of December 2020 will be at least 30% less than what the turnover or orders would have been had there been no disruption caused by COVID-19. So employers must have, as I've said already, employers must have tax clearance to be eligible to join the EWSS and must remain tax cleared to continue receiving EWSS benefits. So in order to qualify for tax clearance, employers must be compliant with all obligations under tax legislation in relation to the filing of tax returns and payment of taxes. However, if you have filed all your tax returns but are not in a position to pay all your tax liabilities and have tax debts that cannot be warehoused under the COVID-19 debt warehousing scheme, you can still obtain a tax clearance. You can still obtain tax clearance if you enter a phased payment arrangement, and this will be done through the Collector General's office. So where an employer files a payroll submission for EWSS but is not in possession of tax clearance, a warning will issue advising that tax clearance is not in place. And hopefully this will provide adequate notice to the employer to regularise the position prior to the return due date, that being the 14th of the following month, to ensure the employer gets the payment of the subsidy. So it's very important for employers just to check their tax clearance. There are instructions on the Revenue website on how to apply for tax clearance and how you can check your tax clearance. Employers are also required to review the eligibility criteria at the end of each month from August 2020 to February 2021. So if as a result of the review at the end of each month, it transpires that the employer no longer qualifies, they should withdraw from the scheme on ROSS with effect from the first day of the following month and cease claiming the subsidy. So this review is to ensure the projected turnover or order reduction of at least 30% for July to December 2020 remains valid and does not require adjustment based on actual trading results to date, together with other developments in the employer's business or the marketplace which may impact on projected turnover for the 6-month period. Excuse me. So if employers find themselves unregistering, they can re-register if a review during the following months shows that they once again expect a 30% reduction for July to December 2020, and this registration cannot be backdated to encompass the period where the 30% reduction was not expected. So employee eligibility. So as mentioned, employee eligibility has been extended to seasonal workers and new hires. They will be included in the sweepback facility till the 31st of July 2020. Childcare businesses registered in accordance with Section 58C of the Childcare Act 1991 are also included in the scheme. So non-TWSS employers or non-eligible TWSS employees are eligible from the 1st of July through a sweepback mechanism, and Revenue will pay the subsidy in these circumstances no later than 15th of September. So where an employer registered for EWSS is making a claim for these cases, they will be required to provide employee information including PPSN, employment IDs, payment frequencies, commencement dates, etc., electronically using a template which will be available on revenue.ie shortly. Once this information is received, Revenue will upload this information and calculate the total subsidy due to be paid. The subsidy will be paid into the designated bank account as soon as practicable after the 14th of September. There are no restrictions under the Transfer of Undertakings Protection of Employment, so the TUPE arrangements, provided such recruitments or movements are undertaken for bona fide business purposes and not with the intention to maximise subsidy claims. There are some restrictions excuse me, there are some restrictions. Certain categories are specifically excluded in legislation, such as proprietary directors and connected parties. So for proprietary directors, in recognition of the role played by certain proprietary directors in providing employment to others, especially in the SME sector, it has been agreed that EWSS can be claimed in respect of certain proprietary directors, and additional guidance will be provided in due course. Of connected parties, so who were not on the payroll at any time between the 1st of July 2019 and the 30th of June 2020. So brothers, sisters, aunts, uncles, nieces, nephews, etc. And this will also be included in the guidance. So registration for EWSS went live on the 18th of August 2020, and the employer, their agent or payroll provider can register for EWSS. Registration is through Ross under Manage My Registrations, and there is a self-declaration to be made. Registration applications will only be processed if the employer is registered for PAYE PRSI as an employer and has a bank account linked to that registration, and that they must have tax clearance. It is important to look into the tax clearance as soon as possible, and if you if you need to get it up to date to do so. So moving on to the subsidy rates. EWSS subsidy is a flat rate to the employer and based on the employee gross weekly wage. So where an employer's gross weekly wage is less than €151.50, there is no subsidy payable. Where the employee's gross week wage is between €151.50 up to €202.99, there is a subsidy of €151.50 payable per week. So between €203 and up to €1,462, there's a subsidy of €203 per week payable. And if an employee's gross weekly pay is more than €1,462, there is no subsidy payable. So operating the TWSS, as mentioned, the subsidy is based on the employee's gross weekly wage. The gross weekly wage includes notional pay before the deduction of pensions or salary sacrifice, but excludes any DASP benefits which employees may have mandated to be paid to the employer. So, for example, illness, maternity, or adoptive. Where a pay frequency is other than weekly, the employer will calculate the gross weekly wage and divide by the number of insurable weeks to a maximum number, and we will issue an update to the guidance around these limits as well. Where payroll is monthly, if employers are found to manipulate the system by changing pay frequencies, pay dates, or altering amounts to maximise subsidy, they will be liable to recoupment of the subsidy received, together with interest penalties and possible prosecution. So the EWSS is returning to the normal payroll process for PRSI, PAYE, and deductions, with the payroll being taxed in the live environment. So the EWSS indicator will not be the J9 indicator, as was the case for the TWSS. It will go back to normal class using the other payments field on the payroll submission, with a value between 0 and 1 to indicate the subsidy request, and this will not appear on the employee payslip. Payroll submissions are to be made to revenue by the return filing date of the relevant month, so that's the 14th of the following month. And where there are multiple employments, each eligible employer makes a claim for subsidy in their own right for the eligible employee. So on to my final slide. So the Act includes a specific anti-avoidance provision which seeks to counteract contrived situations where the gross pay due to an employee is deferred, suspended, increased or decreased with a view to securing the wage subsidy, or in situations where an employee is laid off and removed from the payroll and replaced with 2 or more employees in relation for whom the subsidy would be available. So if revenue identify any such cases, the employer will be treated as having never been eligible for the scheme, and any subsidy payments received would need to be refunded together with possible interest and penalties. Employers should retain all evidence and supporting documentation of their operation of EWSS, as compliance checks will be undertaken, and there will be compliance checks on a percentage of employers operating EWSS on a random or risk basis. So that brings me to the end of my presentation. As I've said, we update the FAQ documents and guidance documents fairly regularly, so you just keep an eye on them. And thank you very much. I'll hand you back over to Pat now for the Q&A. Thank you.
Thanks, Siobhan, for the very interesting summary of the new scheme. You'd be glad to hear we've got lots of interesting questions. Some of them relate to the TWSS and others to the EWSS. So we'll just deal with the TWS questions first. What steps do we need to take to end the TWSS if we are not proceeding with the employee wage subsidy scheme?
Hello, Pat, Gerard Murphy here. Thank you very much for facilitating this webinar and allowing us to at least discuss the end of the TWSS and the beginning of the EWSS. And sorry for the acronyms, they're not our design. The simple process, and I believe Siobhan outlined it there, is you basically stop sending submissions with a J9 PRSI class, stop paying your employees any subsidy, and from now on, from the 1st of September, all pay dates from the 1st of September, please send us normal payroll with normal PAYE and USC and PRSI deducted in the normal way using up-to-date RPNs, which will be on a week one basis for anyone who was already on either PUP or the temporary wage subsidy.
Thanks, Rod. Let's see. Number of questions relating to the recovery of any PAY underpayments arising from the TWSS question. Let's see, number of staff, so someone subsidy, someone not, but they're constantly building up tax liability. Is there any way a company can settle the employee's tax bill if it's in a position to do so at the year end? Very generous employer.
That's something we're actually looking at the moment. We're actively looking at that at the moment to see if there is a method that we can allow employers to settle the outstanding tax liabilities, tax and USC liabilities for anyone who is under TWS. So that is an active issue. Revenue is considering as to how we can probably best do that, and hopefully we'll be in a position shortly to be able to advise people. If anyone is interested in this, though, they should contact us directly through their caseworker and let them know that they're interested in this, and then we can go through the circumstances individually, because the arrangements they may have had with their staff and would need to be all taken care of.
Right, thanks for that. Okay, there's some duplication here to the register. The rules of the TWS scheme do not allow a valid top-up by an employer to bring employees to their calculated net pay. The error is occurring due to a revenue rule on calculation of net pay. Now, I think what the questioner is referring to there is the fact that when you make a top-up payment under the TWSS, because of taxation, etc., you won't necessarily get to the same net figure that had previously applied. I think it's fair to say that Revenue have always pointed out that the TWSS scheme never guaranteed that it would match net pay, because just the nature of things, that couldn't be done.
Unfortunately, this is one of the, bearing in mind it was an emergency scheme. It was designed overnight, literally over 2 nights actually, and a day, to bring about emergency funding to employers to keep their staff on payroll. It was never designed to be a perfect scheme. That being said, the rules of the scheme were set out so that the average revenue net weekly pay would never be exceeded, and that was the baseline that we were operating on. And anyone who was operating the scheme, we were willing to pay, and the state was willing to pay a subsidy of up to 85% of salary, and allowing a top up of the extra 15% as long as the ARNWP wasn't breached, so that neither the employer or the employee benefit from over their January and February payroll. Please bear in mind it was designed originally to be a temporary short-term scheme. It's now gone on for about 6
Indeed.
months.
Yes,
Yeah,
yeah,
just
yeah.
short of
Through
6 months.
a number of iterations, indeed.
There,
I suppose that the
yeah.
questioner has, I suppose, has asked a sub question that, which I think is very quickly easily answered. Then, will the EWSS address this anomaly? Well, clearly yes, because it's a flat rate scheme, and effectively you're reverting to normal payroll for the employees from the 1st September.
Yes, I mean the
Yes.
EWSS is a normal payment, and you tax it normally. It's a subsidy to the employer, so the employee-employer relationship is a matter for the employer-employee. We won't be telling the employer how much he can or cannot pay, but the subsidy would be based on whatever the gross pay is given to the employee.
Grant. We're getting a lot of questions about the eligibility criteria, so I'll try and pick ones that will cover the multitude, so to speak. The one question that is recurring, it just relates to the requirement to conduct a monthly review, and I'll just give you an example. Our year-to-date sales are very far down compared to last year. August sales are at 29% compared to the same month in 2019. Question: does the fact that we are below a 30% decline in the month of August make us eligible for the EWSS?
Hi, Pat, Angela here.
Thanks,
I'm going to take the EWSS queries. You'll have seen in the guidelines and in the presentation that the eligibility is based on a 6-month review. So fair enough, they're down 29% for August, but you look at what your results were in July and August together with your projections for September to December, and you compare that with your results for July to December 2019. So it's not a 1-month only review, it's a 6-month review.
Yeah, I think that's a very important message, because certainly, even in my own experience and based on the questions I'm seeing coming up here, there seems to be a wide misunderstanding that each month effectively is a standalone basis. And so that, for example, if you didn't meet the threshold in 1 month, as in this example, that you would drop off. But your point is that you are looking at the 6-month period as a whole.
That's correct. Yeah, you look at the full 6 months. So in this situation, Grant, August isn't down the 30%, but when you look at the full 6 months, they may be down
Okay, so
30%.
it's always forward looking. Yeah.
Correct.
Yeah. Related question then: is the 30% eligibility limit set in stone, or is there any movement on it? I can guess the answer to that one.
Yeah, well, that's in legislation, so
Yes.
there's no plans to have any movement on it. It's a policy decision for finance, but at the moment we're 30%, and I know there would have been at the start of TWSS as well some questions around whether there'd be movement on the 25%, and there wasn't, so I don't expect either that there'll be movement on the 30%.
Yes, okay, understood. The operation of the scheme, one of the key features of the TWSS was the very quick turnaround on the payments, which was practically overnight in a lot of cases. Question we have is: why is the reimbursement moving from weekly to monthly? The first payment would be 6 weeks after on the 14th of October, and would be a real burden for a lot of business from a cash flow perspective.
Again, that was a policy decision, and it's written into legislation that it's a monthly payment and it's a monthly process. I know this has come up as well and other webinars, and we have fed back to our legislative department to talk to finance, just that it has been raised as an issue, but again, we don't see that it's going to be something that's going to change.
Thanks. Okay. Just in relation to the calculation of turnover, we've a number of questions regarding the impact of grants on the calculation of turnover. So in the question relates to the revenue guidance that employers need to include all sorts of trade income, specifically including sales, donations and state funding, etc. In this example, the questioner received some small investment funding from state agency, which are revenue grants. However, they also expect to receive a capital grant in respect of machinery. Do those capital grants have to be included in turnover?
Yeah, well, capital grants would never be included in your P&L, so they wouldn't be part of your turnover. And this issue on grants that are included and excluded is going to be covered in version 2 of the guidelines, which we expect will issue in the next day or two. Great,
thanks, Anne. And again, a lot of questions on the proprietary directors and shareholders. I suppose this one sums it up really. I'm a director and main shareholder in the company, but I work full-time in the business, the same as their employees. Am I eligible for the EWSS?
Yeah, that person, because they're, sorry, you said a shareholder and a director, apologies, is it?
Yes, yeah.
Yeah, we're waiting for clarity from the Department of Finance. We're still waiting for it on the proprietary directors. The issue is actually on the Minister's desk, I'd say, as we speak, so it's imminent. Hopefully this afternoon we'll have a bit more clarity as to what proprietary directors are eligible and ineligible.
Yes, yeah, because as matters stand, the legislation specifically excludes proprietary directors.
That's correct. Now, the Minister did say that he would be including some of them, people who had ordinary employees, but we're just waiting for the absolute clarity on what proprietary directors are included and excluded. And like I say, hopefully this afternoon we'll have it.
Great.
And just to add to that, Pat, you've said there that it's in the legislation. Like, while we acknowledge it is in the legislation, that whatever criteria or conditions come out today, which we hope to get the decision from the Department of Finance, any amendments to the legislation will be made in the Common Finance Bill this autumn. So just to clarify that, please.
Yeah, I mean, and it of course has been a feature of the whole process during the pandemic that things that we wouldn't normally see, that, you know, having to retrospectively legislate for things which had to be done, you know, overnight, as Gerard mentioned earlier. So, yeah, that is something that we've seen. All right. In another question, this was addressed in the TWSS as well, and it's in the current guidance. It refers to businesses that are structured with having a number of divisions. For example, a retail chain with a number of shops. And the question then, I'll just read it. The guidance addressed the position of companies that are structured as separate divisions. Our business is a single company, consists of several branches, which are retail outlets, each of which has a separate trading profile, branch accounts, etc. Due to issues such as location, etc., some branches are more severely affected than others, with turnover down by well over 30%. Can we qualify for the EWSS in respect of those branches which are experiencing a decline of more than 30%, even if the overall decline for the company is below 30%?
Yes, that's covered in the guidelines in one of the appendices, and it does speak about the ability to look at each branch separately if it has been set up as a separate business division, and by that we mean that it has a separate reporting structure, separate management structure, and no staff crossover between them, or if there is, that it's minimal. In the instance you're talking about there being separate financial statements, separate management, separate staff. So it looks like they will actually meet the criteria just based on the information you've provided.
Yeah, as long as it's clearly identifiable.
Yeah. So each branch that is eligible, you know, that each branch that is suffering the 30% decline will qualify for the EWSS in respect of staff attached to that branch.
Right, thanks. Then coming back again to proprietary traders in this instance, I'm a sole trader with 2 employees. I intend to place my employees on the scheme. I guess I can't go on it myself, as I don't get a wage. I just work from what is left in my funding after everything is paid.
Yeah, apologies. That's what I thought you were asking originally. Yeah, in situations like that, there isn't an employer or employee relationship. Yeah. So because there isn't an employer or employee relationship, there's no wages being paid. And if there's no wages being paid, you can't get a wage subsidy. So, yeah.
Unfortunately, yeah. What happens if you register and get the subsidy, but at the end of the period, you find that you're less than 30% in turnover, reduction in turnover?
Yeah, you would have seen in the legislation and the guidelines the requirement to actually undertake a review at the end of every month, just to make sure that your projections that you made at the start of the period are still valid. So as the time goes on, like in November, you'll be looking at actual results for July to November and only projections for December. So you'll never come to the stage where at the end of December, you'll have realised, or even in March, you'll realise that you haven't met the eligibility criteria, because you'll have been continually reviewing it on a month-to-month basis.
Right. And And if it is the case, though, that we'll say halfway through that that you realise that you're not going to make the threshold, what would happen in those cases, presumably, because if you've already received the subsidy, say, for that initial 3-month period?
So for the initial 3-month period, you would have done the projections and you would have done your monthly reviews and you would have backup to prove that you did have an expectation that you would be down 30%. So you don't have to, you can retain the subsidies you have received, you don't have to repay them, but
Right.
just you need to retain the supporting documentation. So if it's ever queried as part of a compliance review in the future, you can actually show that there was reasonable justification for the claim for those relevant ones.
Yes, much the same as was the case with the TWSS, except that there is, I suppose, a built-in reminder now to businesses to keep an eye on the threshold throughout the period of the scheme, rather than a single last day event looking at it. So yeah, thank you. That answers that question. Next question: can I include in a new staff contract that their job is temporary for the duration of the EWSS? I'm not sure that this actually is covered in the legislation.
There's actually no requirement for an employee to be on your books on a particular day, other than the connected party test, where someone has to have been on your books and paid between the 1st of July 2019 and the 30th of June 2020. So for all other employees, there's no requirement for them to be full-time, part-time, on your books at a particular time. It's just a test on the pay date. So if you're making a payment on a date, then the subsidy is claimed in respect to them, provided obviously that all other criteria is met.
Yeah, and I suppose as a general comment there, it is a much simpler scheme. It's not focused on eligibility of individual employees, apart from the ones we've discussed, the proprietary directors and connected parties. But apart from that, it's pretty much every employee who's on the payroll of an eligible employer is covered by the scheme.
Yes, it's going to be much easier to, well, hopefully to administer than the temporary wage subsidy scheme. As well, the fact that you're going back to normal payroll taxation, where POI, PRSI and USC is applied to the full wages paid in accordance with the normal rules. It'll be it's a subsidy to the employer, so
absolutely,
it's much easier to administer.
I think that would be widely welcomed. Okay, directors. We've a couple of questions specifically relating to the child care sector. So if I may, if I just address those. Could you clarify whether it is the case that childcare businesses, registered childcare providers, have to meet the 30% requirement?
Yeah, there's no requirement to meet the 30% reduction test for the businesses which are registered under the relevant section of the Childcare Act as set out in the legislation, the guidance. I just don't have, I think it's 58C, it is.
Yes.
So once you're registered under that relevant section of the Childcare Act, then you're automatically included without a requirement to show a reduction in turnover. Laura, it is 58C, is it?
Yes.
Sorry, I thought, yeah.
It's 58C of the Childcare Act, 1991.
Yeah, perfect. Yeah, thank you.
Okay, and another question in relation to the childcare sector. Is it the case, and there seems to be a doubt on the part of the questioner there about the end date for the scheme? Does it only apply in for early year schools until December 2020? In other words,
again,
what is
there's
the end date?
Yeah, the end date is the same for everybody in the scheme.
Under the
EWSS. So at the minute it's the 31st of March, which the minister has the option to extend it to the 30th of June 2021, but at the moment it's 31st of March.
Good. Then looking at the sweepback, maybe if you just address that the question, particularly interested in how to backdate funding for new employees since July 1st. Also, can we increase current employee rates above pre-COVID-19 rates? Or maybe it's just address the first part in relation to the sweepback.
Yeah, so we're currently planning the operation of the sweepback and trying to do it in as efficient a way as possible. We expect to be able to issue guidance on how that will actually operate next week. It will involve the provision of details by eligible employers of eligible employees of which they wish to claim the sweepback for. So it will be basically any new employees who weren't eligible for TWSS. So if they were taken on after the 29th of February, they wouldn't have been eligible for TWSS. So you can't claim a sweep back in respect of them. But the guidance that we'll issue will have more details around how all of that will operate. And like I say, hopefully next week we'll have that.
Okay. Just read the question. This is on the TWSS. Payday is normally every Thursday in arrears for previous weeks to the Tuesday. In this case, no, I'm sorry, I'll skip that because I think there's just too much detail, I think, just to go into it right now.
I think I know just from the other webinars, a question that tends to be asked kind of, and it sounded like that's where you were going, is, you know, if you earned the wages in August, do you claim T was in respect to them? But you look at the pay date. So if it was earned in August but paid in September, you claim the E was in respect of it. It's the pay date dictates whether it's the temporary wage subsidy scheme or the employment wage subsidy scheme is claimed. So if the payment is the 31st of August or before, you claim the temporary wage subsidy scheme. If it's the 1st of September or after, you claim the employment wage subsidy scheme.
Okay, so it's the date of payment is the date, yeah. And the EWSS, if employer doesn't normally pay sick leave, if staff have to isolate due to COVID, should employer continue to pay EWSS, or should I not pay them and they sign on to the COVID payment or sickness benefit?
Okay, just the first point of clarity is that EWSS is a subsidy to the employer. It's not a subsidy to the employee. So it depends on whether the employer makes a wage payment to the employee as to whether the EWSS will be claimed or not. There's no, you know, link between, apologies, like if you make a wage payment to the employee, then you can claim E was in respect to them. And it's an employer-employee, it's between the employer and the employee what the arrangements are between them when it comes to things like COVID and sick leave, and their contract of employment will cover items like that. If, like I say, there's an obligation that you make a payment to the employee, then you can claim E was in respect to that.
Right. So once they're making a payment, however they characterise it, then they can claim the subsidy.
That's correct.
Yeah. Just going back to the question of arrears in relation to the payment of the TWSS, and you outlined there, or Siobhan outlined in the presentation, how the collection would take place and that it wouldn't begin most likely until 2022. What is the case? What is the position there for self-assessed taxpayers? Because they would have obviously a liability that would arise at the year end. Is there any facility to defer it for them?
The self-assessed people will be making their tax returns for 2020 in 2021.
Yes.
So they will already have gained that, and we'll be operating the same. The 2021 will be in the pay and file in 2021. So the opportunity will exist then. We've a bit of time to look at that. What we're doing for Form 12 is exactly the same procedure that we would be operating in normal cases, where it's not that we're deferring, we're just operating our normal processes in respect of PAYE liabilities, and we'll be operating the same processes for self-assessed people using the Form 11. So we're not making any changes. It's just as it appears as if we're that it may seem that we're giving some sort of leeway to PAYE, but we're not. We're just operating as normal in respect of the collection of under liabilities, under payments, if any do occur.
Okay, I see another TWSS question while you're there.
Apologies, that's me.
Sorry. TWSS. TWSS, first payroll after J9 submission and into EWSS. How will this look for employee? Will their PAYE increase to above what is usual for the employee? So this is where they're transitioning. They've been on the TWSS, and then they go to the EWSS in the first week in September.
Well, if you think it through in a practical sense, so the last week, say the last pay date in August, they're on the wage subsidy. They'll see that, say they're getting a wage subsidy of 350, and they're also getting another, say, 250 as gross pay as the additional top up. What they'll actually see now, if the employer is operating the EWSS and he wants to keep a similar gross pay, he'll be providing a gross payment of what's that, what did I say, 250, 600 euros, and that'll be taxed in its entirety. So we're returning the employee as normal.
Yes.
So we won't be bringing that taxation to the end of the year, because it's a normal wage, and the employee will be returned to normal. The employer will be getting the subsidy then of, in that case, 203 if that person is an eligible employer and an ineligible employee.
Yes. So in reality, the employee won't be paying any more tax than he would have paid. It's just a timing.
It's a time.
Yeah.
So that we're returning the employees to normal, and we're returning the employee-employer relationship back as if to normality, with the EWSS subsidy being paid to the employer.
Yeah. Okay, just very briefly, I see we're coming up to the time. So one last question. Let me see. You'll like this one. Pascal O'Donoghue, who was on RT Radio this morning and was suggesting that he expected companies to increase hours of employees so that they meet the lower minimum eligibility level of €151. Yet the revenue info sheet suggests that this would not be acceptable.
I think the revenue info sheet talks about manipulation of pay rates rather than manipulation of pay hours. So if you're working extra hours, you know, it's different. It's the rates. We have issues with pay rates and pay frequencies rather than the extra number of hours. It's great that people have extra hours for their employees. We welcome that.
Absolutely. Okay, I think that covers everything. Unfortunately, we haven't got to every question, but I think the questions we have covered touched on the key topics that were covered by the other questions as well. So thank you everybody for your questions, and apologies, as I say, if we didn't get to them all. Just to wrap up, I'd just like to again to say a very sincere thanks to our participants from Revenue this morning. It's been really useful. It's a great opportunity to ask these questions in real time and to get very clear and useful answers. So thank you again for taking part today. It's really appreciated. So with that, I will bring the webinar to a close. Thank you all for your participation, and look forward to speaking again in the future.
Thank you.
Thanks, everyone. Bye-bye.
Bye now.